So they are generally accepted accounting principles. We're talking about the accounting from incomplete records, or in other words, it is called single entry system of bookkeeping. So all the big companies, they have, systematized way of recording the business transactions. Uh, you take any big company, they follow generally accepted accounting principles. And every country has their own accounting standards of treating the items, okay, or treating the business transactions. If you take United States, they have US GAAP. If you take India, India has an Indian GAAP. Okay, so every country has accounting standards setting authority. If it is United States, it's called Financial Accounting Standards Board, FASB. Okay, if it is India, it is Accounting Standards Board. And this Accounting Standards Board is the subsidiary, or it is part of your Institute of Chartered Accountants of India. Okay, so this ASB, Accounting Standards Board, is responsible for setting up standards and introducing the best practices of accounting standards in the country. Okay, now this is what happens in general accounting process or profession. But if you go to Malaysia, who sells the vegetables, okay, in your street, or if you go to Manik, the grocery store owner of your lane or your colony, you go and ask them, hey, how do you treat depreciation in your books? He just looks at you. What's that nonsense you're asking? It is either Malish or any other grocery store fellow or any pawn shop wala. If you ask them, how are you treating your goodwill, right? Or if you ask, even Pista House has become popular now. They might be having systematized way of recording. But some time back, it was just a store. Okay, Paradise was just a restaurant. Okay, it is just an informal restaurant. They just buy and cook the food and supply. There are no proper accounting records. Okay, so therefore, they just try to take how much they have spent and uh, uh, and how much they have earned and take the difference of that, and they say this is our profit. They don't know how to make a systematic way. Okay, if at all, if you're doing accounting for such people, that's called single entry system. Who is the proponent of double entry bookkeeping system? Who is the proponent of double entry system of bookkeeping? Yes, can you recollect?
Companies.
No, who is the first person to introduce double entry system?
Partnership, sir.
No, the man who introduced the double entry system.
Oh,
Till
double
till he started using the double entry system was not known to the world. Okay, that's a gentleman. Okay,
Pacioli, sir.
yeah, Pacioli. Luca Pacioli is the first person to introduce double entry system. Till then, people were recording in the way convenient for them, all business transactions. And finally, they used to arrive at profit in the way they can, or in the way that is possible for them, right? But it is Luca Pacioli who came and said, hey, look at this. Every business transaction has a twofold effect. If there's a giver, there's a receiver. If there's a receiver, somebody must give. Okay, for example, if you stand at a traffic signal point and beggars will come. If there's a receiver, then there's a giver. If there's a giver, there's a receiver. So the process of begging, okay, it is not complete if there is no giver. You stop giving, there are no beggars in the city. You stop giving, there are no beggars in the city, because all beggars will come to know this city is of no use for us. Okay, either they'll give up their begging or will choose another city or town or village, right? So I'm not saying, I'm not, suggesting you to be cruel to the poor people or to the needy people. I'm just telling you, if there is a receiver, there must be a giver. In a business transaction, if there's a benefit giver, there's a benefit receiver. Okay, that is what he introduced. But contrary to that, what's single entry system? Okay, what is single entry system? You take the transaction as it happens, as it occurs, and just record that. And you make only one distinction. What are the expenses? What are the incomes? Okay, and also you will make another distinction. How much was my capital in the beginning and how much is the capital now? If there's a difference between two capitals, let's say I introduced 1000 rupees, okay, and started buying the vegetables and started selling it. Right at the end of the day, my 1000 became, okay, 1500. There's a difference between the opening capital and the closing capital. What's that? 500. 500 is a profit. The difference between opening capital and the closing capital, right? That is how things happen under single entry system. Okay. So, but there are some shortcomings. There are some drawbacks. Okay. Uh, in the single entry system, like what? There is no proof for every transaction. There is no evidence supplied, okay, for checking the accuracy of the figures or events that took place, right? And the profit and loss is not properly ascertained, okay, because Malesh, okay, or Dharmesh, they are not well acquainted with any of the accounting principles that you're talking about, okay, from the first semester of BCom program. They don't know, okay. So therefore, the profit calculated under single entry system is improper, it is not accurate profit, okay. And the what about the accounts related to the assets and liabilities? You might be using the cart. He doesn't know that it is called asset. Or on the cart, all the vegetables that he's stuffing, they are stock. He doesn't know that it is stock. A stock is not an asset. He doesn't know that. He confuses the stock to be an asset and an asset to be a stock, right? And he doesn't know what's the distinction between a liability or an income. So this is a confusion in the mind of a person who is maintaining accounts under single entry system, right? And under single entry system, the balance sheet is not called balance sheet, but it is called statement of affairs. Statement of affairs. Okay. And there's a news, yeah. If at all, if you want to take the previous balances of a company, accounting balances of company pertaining to the previous year, and if you try to compare with this year, okay, is that possible? Is that possible? No, because the data that was there in the last year, look at this, you'll find a small pocket dairy in the pocket of, they'll keep some pocket dairy. Okay, all these Malaysia, Pentaya, Pulaya, all these people. Okay, and they just write down everything that they just carry on, right? And they just take a calculator or just take a pen and paper and just jot down and just chart out what's a profit, what's a loss. And this dairy may not be there for the next year or next accounting period. He'll just throw it once the work is over, or once the dairy, that booklet, the small booklet, pocket dairy is exhausted with its leaves. They'll just throw it away. And this will not facilitate comparison, right? So these are the drawbacks of Okay, single entry system. Therefore, we are moving on to double entry system. Okay, now how to ascertain a profit under single entry system? Okay, how to ascertain profit under single entry system? Come on, can you just tell me how to ascertain profit under single entry system? Those who have some knowledge, can you just attempt single
Sir,
entry?
but
Yeah, Jones. Okay, Jones.
sir, one doubt, sir. Single entry is enough, now, sir, for this?
Yeah, we're talking about single entry. We are not talking about double entry.
Yeah, yeah. No, sir. By preparing the receipts and payments account, we can get the I mean, we can get the required profit or loss account, no, sir.
Yeah, yeah. I'm just telling you. I'm just taking your attempts, right?
Okay.
Just wait for my correction. I had to correct and modify your statements. Okay, look at this problem. Jones keeps his books by single entry method. On 1st May 2004, his financial position was as follows. Cash in hand 250, cash at the bank 3,000, stock in hand 7,500, fixtures and fittings 350, sundry debtors 9,800, plant and machinery 15,100, sundry creditors 9,000. During the year, Jones withdrew from the business various sums amounting to 5,900. Okay, 5,900. On 30th April 2005, his financial position was as follows. His financial position was as follows. Okay, as follows. What is that? Sundry creditors 7,500, plant and machinery 18,100, fixtures and fittings 320, sundry debtors 13,300. Okay, stock in trade 14,000, cash in hand 150, bank overdraft 2,600. Please correct me if I'm reading anything wrong, okay, by mistake, any figure. If I'm going wrong in any figure, please do correct me. You're required to prepare a statement of profit and a closing statement of affairs. Okay, this is the case given to us. This is the problem given to us. Before you analyze the problem, let me tell you, it's as simple as this. It's as simple as this. Calculate, or I'm sorry, uh, prepare the opening balance sheet, prepare the closing balance sheet. Step 2. Step 3, calculate the profit. The difference between the opening profit, opening capital, and closing capital is your profit. Come again. Step 1, preparation of opening statement of affairs. Step 2, preparation of closing statement of affairs. Step 3, calculate the profit. So you said balance sheet previously, now you're saying statement of affairs. Now, when there is no proper system of bookkeeping, where is the question of balance sheet? So there's no balance sheet. We call it statement of affairs. We call the same statement of affairs. So there's an opening statement of affairs, okay? And that's step 1. Under step 1, you will be calculating opening statement of affairs. Under step 2, calculate the closing statement of affairs. Under step 3, calculate the profit. That's it. End of the solution. It's as simple as that. Okay. Now, in light of these 3 steps, look into this problem. Look into this problem, and this problem also contains some hints that I have marked. Please notice that. Yeah, when I have analyzed the problem, okay, there are hints marked there on the problem. Okay, Jones, okay, is a person, sole trader. He's a sole trader. Who is Jones? He's a businessman, sole trader. Generally, this single entry system is followed by sole traders, small business vendors. Okay, it is not followed in any full-fledged proper organization, right? He's a sole trader and he's maintaining his books under single entry system, right? Now there's one date. What's that? 1st May 2004. What is that? That's opening date. That's opening date. Okay. On the opening day, okay, his details were presented just as below. What does it mean? What does it mean? These details happened in the previous accounting period. These details happened maybe last month or maybe last year. Okay, or maybe previous day. In single entry, there is no proper system, right? So therefore, then it need not be an year, a financial year. Okay, it can be a month also.
So your voice is getting disturbed.
Okay, but I'm able to hear you clearly. Yeah, I'm able to hear you
Yeah,
clearly.
sir, it's clear only. I think it's only his side.
From your side, just check your network. Okay, so yeah, now opening date you have identified. As on the date, you have got the details, right? Then there's one more date on 30th April 2005. 2005. What is that? That's a closing date. That's a closing date. And as on the date, the details are presented to us, right? With the opening date details, we'll prepare opening statement of affairs. Statement of affairs, SOA, step one. Okay, opening. And we don't call it opening. We don't write it opening. We may say opening statement of affairs, but we write the date. Statement of affairs as on 1st May 2004. That's how we write. Okay, statement of affairs as on 1st May 2004. But actually, that's step one, which is opening statement of affairs. Now, step two is closing statement of affairs. What is that? Statement of affairs. We don't write opening, closing statement of affairs, but we write statement of affairs as on which date? 30th April 2005. 30th April 2005. Okay, right? Then we calculate the profits under step three. Okay, so let's take the problem. Let's take the problem. Statement of affairs. Statement of affairs as on 1st May, okay, 2004. Right? This is statement. Okay, then take the account. Take the account. Okay, right. So the debit side and the credit side. And look at this. This is not an account, no? Sorry, I'm mistaken. This is not an account, right? Then you will have liabilities. Okay, you have assets, right? Amount, it's a statement. Amount, it's a statement. Okay, now what are the liabilities? Okay, as on this date, 1st May, the details are given. Now, cash in hand, cash at bank, stocking trade, fixtures and furniture, fittings, all these are items. Okay, in these items, what are the liabilities? What are the assets? If there are liabilities, drop here. If there are assets, drop here. Okay, from that list. From that list. Okay, now just give me a minute. Hello. Right. Uh, Yeah. What are the liabilities as on 1/4/2000? 1/4/2001 May, na? This is 1st May. 1st May 2004. Yeah, 1st May 2004. Liabilities. Sundry creditors you have. Okay. Sundry creditors. Sundry creditors. Okay. And what's the amount of sundry creditors? Amount of sundry creditors. Sundry creditors 9,000. Okay. Then you have what else? What liabilities you have? Debtors is an asset. Okay. Plant and machinery is an asset. Furniture an asset. Cash an asset. Bank balance an asset. Stock an asset. All these are assets. So let's take one by one. Cash in hand. Okay. How much is the amount? Cash in hand. How much is the cash in hand? What's
150, sir.
150? Cash in hand 250, na? Cash in hand 250. Next, cash at bank. Okay. Cash at bank. Cash at bank.
So which one are we seeing? First one or second
First,
one?
no, the second problem. Second problem.
Okay.
Problem number 2, which is the first problem in the sheet I have shared to you. Number 2 is a problem, but it is first problem. Okay.
Okay.
It is the first problem of the sheet, but its number is 2, number 2. Okay, so this is cash at the bank, 3,000. Okay, next you have stock. Stock is 7,500. Next, yeah, next after stock, fixtures. Okay, and fixtures how much? Fixtures 350, right? 350. 350. Next, sundry debtors. Sundry debtors. Debtors. Sundry debtors. How much? Sundry debtors. 9,800. Okay. Next, plant and machinery. Plant and machinery. Plant and machinery. 15,100. 15,100. Anything else we are left with? Once again, please check it. Cash in hand we have taken, cash at bank we have taken 3,000, okay, and 250. Stock in trade 7,500. Furniture and fixture 350 we have taken. Sundry debtors 9,800 we have taken. Plant and machinery 15,100 we have taken. Right? Is there anything left over? Sundry creditors already taken. Okay. During the year, Jones withdrew from the bank. Okay. You know, drawings 5,900. Okay, 5,900. That's a drawing. Okay, we'll just check it later. But now, as of now, the total is 3,600. Okay, this is the total 3,600. And the difference, the balancing figure is 36,000 minus 9,000. How much? 36,000 minus 9,000. Okay, 10, 27,000. What is this? What is this? What is this? Opening capital. Okay, capital. And in bracket, write down balancing figure. This is difference. This is balancing figure. Okay, so this is the total you have done with step 1. Okay, look at this one. What is that step 1? Yeah, step 1. Step 1. Okay, calculation of opening capital. You have done it through opening balance sheet, which is called opening statement of affairs. Statement of affairs as on 1st May 2004. Okay, this is over. Step 2. Step 2. Okay. Step 2. Calculation of closing capital. Okay. How do you write it? Statement of affairs. Okay, the same thing. Statement of affairs. Right? Statement of affairs. But not as on 1st May, but it is as on April. Yeah, what is this? As on April 2005. April 2005. Okay, April 2005. Which date? 30th April. 30th April. 30th. Okay, April 2005. Right. And what are the liabilities under this? What are the liabilities? Yeah. Look at the second paragraph. Look at the second paragraph and read it. On 30th April 2005, his financial position is as follows. Sundry creditors 7,500. Sundry creditors 7,500. And sundry creditors 7,500. Plant and machinery 18,100. 18,100. Okay. And fixtures and furnitures, fittings. How much is that? 320, right? 320. 320. Okay. And sundry debtors, 13,300. Sundry debtors, 13,300. Okay. Next, stock in trade, 14,000. Stock in trade, 14,000. 14,000. Okay. Cash in hand, 150. Cash in hand, 150. Okay. Cash at bank. There's no cash at bank. So therefore, this is,
Sir, time up, sir.
yeah, this is irrelevant. There's an overdraft. Okay. Bank overdraft. And this is coming to 2,600. 2,600. Right? 2,600. That's it. Yeah, you will get a difference that's called balancing figure, closing capital. Okay, this is closing. Sorry, this is closing capital, right? And after that, step 2 is step 3. Step 3 is calculation of profit. Calculation of profit. Okay, that's it. So step 3, calculation of profit, the difference between, okay, opening capital and closing capital. Okay, closing capital, closing, I'm just taking 1 minute more. Closing capital, okay, and whatever is the amount. Okay, then add drawings and interest on drawings.
So time's up, sir.
Time's up. Okay.
Yeah.
We'll do it maybe in the next class then. We'll stop here. Okay.